Palo Alto Networks reported earnings last night. Is the stock a buy now, or did Keanu Reeves save the day?
I needed some help. Good thing I knew someone. Awesome.
I'll break down the earnings, the fundamentals, we'll look at a chart, and I'll tell you where I think the stock could go. All right, so you can see the stock sold off after earnings last night. It was about $295. Now it's $316. It's actually up almost 4% over the past 5 days. Year to date, the stock's up about 9.5%. Over the last year, it's up 64.61%. And over the last 5 years, it's up 338%. So down 2.32%, but not bad considering it was $295 last night right after the earnings report. Now on Google here, it's showing a 46p ratio. We'll look closer at valuation later, but $102 billion market cap. That 52-week low, 188.30, that would have been a good buy like a lot of stocks a year or so ago. And that 52-week high, $380.84. So we're about $64 from all-time highs.
Awesome.
So the headline numbers are good, a beat on the top and bottom lines. You've got non-GAAP EPS, $1.32, beat by 7 cents. Revenue, $1.98 billion. That beat by $10 million, and it's up 15.1% year over year. RPO, that's the remaining performance obligation, grew by 23% year over year to $11.3 billion. That is a good number. Non-GAAP operating margin grew 200 basis points year over year to 26%. For outlook, revenue range $2.15 billion to $2.17 billion. That's basically in line with consensus at $2.16 billion. Now, year-over-year growth is between 10 and 11%. So you are seeing some slowdown here with the growth. Now, if you haven't been following this story, part of the reason the stocks had pressure, Palo Alto earlier this year offers no-cost platform trial to move customers from legacy products. Now, of course, longer term, that's probably a good thing. The issue, the concern, especially with Wall Street cares about right now, maybe 6 months from now. They don't care so much about 6 years from now. So this transition was for a no-cost period for its platform until customers' existing legacy contracts expire. So this is really about the shift to the platform. Platformization. It's a hard word to say, but you get the idea. So of course, all eyes on the earnings call, we're going to be talking about the platform. And this said it had no impacts on billings. The pressure remains consistent with prior quarters, a greater volume of large deals opting for deferred payment terms. And a quote here, the feedback we're receiving post print is primarily frustration that management didn't fully reset the bar, along with concerns about the de-risk billings guide. So Evercore maintains its outperform rating on the cybersecurity firm and its hefty price target of $385. Morgan Stanley, overweight, price target of $360. Stifel, buy rating, price target $330. Wolf Research, outperform and price target of $315. Now, what's the problem with that? Well, the stock is trading at $315 right now. And on Seeking Alpha, we've got a couple articles today. Palo Alto Networks, you were warned. This is a sell rating that just came out this morning. Also, another one here, Palo Alto Networks Q3 earnings, moving from star performer to falling angel. Also a sell rating. So what do you think? Is Palo Alto a sell at $315 or a buy? Drop me a comment. Let me know what you think. And let's keep digging and I'll give you my answer. All right, let's spice things up. This is a comment on Seeking Alpha. You need 10 years of 15% growth. FY24 guidance is 10%. Margin expansion from the current 10% to 20%, plus no further dilution, and a 45x terminal multiple in order to get to a 10% return from the current $300 price. Now it's trading at $315. Price for perfection, I think they call it. What if perfection doesn't happen? In a reply to that comment, agree. This cybersecurity sector is volatile with ongoing increasing competition and now seemingly no sector leadership. Just bailed out of Fortinet for mediocre return over a year and a half. Better opportunities out there.
Bruh.
Okay, so first of all, cybersecurity is not going away. And AI is just going to amplify the need for cybersecurity. Now, if you want to dump gasoline on that, what happens when we have quantum computing readily available? And the question is, can these companies like CrowdStrike, like Palo Alto, Zscaler, and so on, can they pivot and actually stop those breaches when you have quantum computing? And right now, the answer would be no. So there's certainly risks. The secular trend is definitely there. The TAM, the total addressable market, is definitely there. All of these technologies can be disrupted. So you're going to have to really understand and trust the leadership for any company that you buy, especially in the cybersecurity sector. And Nikesh would be the CEO and chairman of Palo Alto. So you'd have to understand and trust this person as the leader of the company. Now, here's some good snapshot numbers here. And you can see the numbers look pretty good overall. But you look at that total revenue, up 15% year over year, total billings up 3% year over year. The question is Is that the number we should be looking at? Should we be concerned about total billings? I'll explain the answer to that question later. So here's that platform framework again. We measured our success in landing platforms over the next several years. So land and expand. At least one platform, 100%, two platforms, 51%, three platforms, 13%. And this is looking at the forecast here for FY30. 900 platforms through Q3 of 2024, 65 new platforms, 2,500 to 3,500 to reach 15 billion target FY30. And this is looking at some of the new deals and new logos, 7-figure deal, 8-figure deal, 9-figure deal. This is a healthcare provider. Greater than $1 million accounts in Q3, you've got 22% growth at 397. $5 million accounts, that's 17% year-over-year growth, 84. And then 10 million accounts, these are the big dogs, 32 and 28% year-over-year growth.
Awesome.
Also partnering with IBM, expansion of partnership to drive the platform and joint customers with initial focus on security operations. This is showing a $15 billion TAM. How it's going to get there. If you listen to the earnings call, they were talking a lot about AI. And that specific slide is focused solely on AI security, continuing to deliver innovation across our three platforms and cement broad market leadership across all three platforms. Now, you just saw that comment earlier saying there were no leaders. There are definitely leaders. You just have to understand the space. For example, when you think of endpoint security, the big dogs there are going to be Microsoft, but you have CrowdStrike is the leader, the best of breed. You also have SentinelOne. That's more focused on SMB. Now, we'll look at a graph here in a second that kind of breaks down the cybersecurity industry, and it'll give you a better insight of how it all lays out.
Yeah. I mean, I have graphs. I have some graphs I can show you. If you pay attention to these patterns here, you can see on the graphs. I made these on my computer.
Wow. I want you to take a look at this slide and bake it into your memory. So look at the orange, that billings growth year over year. And this is where there's a lot of criticism because it's going from 32% down to 3%. You can see ARR growth down to 47%. Now, this isn't uncommon. You're going to have a certain point where you can't grow at the same rate. And you see this with a lot of these companies, these hyper growth type companies. RPO growth, 23%. That is up from 22%, but it's also down from 39% back here in Q3 of 2022. And then you have that services revenue that went from 32% down to 20%. Now let's look at a post on X from Ivana Spear. Now she heads up the Spear Alpha ETF. The ticker is SPRX. We've talked about this several times on the channel. And if you're looking to ride secular growth trends such as artificial intelligence and cybersecurity, this is definitely an ETF you should check out. The performance in 2023 really crushed everything. So she's saying, is the street focused on the wrong metric? What the market didn't like from the earnings report was that billings growth that I showed you of 3%. But what stood out is the ARR growth of 47%, best in class and ahead of expectations. And RPO, as we mentioned, went up from 22% to 23%. Billings growth is discretionary, dependent on payment terms. So RPO, ARR growth are better measurements of this business in her opinion, and I agree. And just to show you the ETF, this is SPRX. Look at the 2023 returns. Year to date, 88%. So 88% in 1 year. S&P 500 gave you 26.3%. Now, this is another great post, and it gives you the cybersecurity ecosystem, the lay of the land. Now, when you think of endpoint security, for me, you think of CrowdStrike. Of course, Microsoft is in there in SentinelOne like we talked about. Palo Alto is also in there. Now, CrowdStrike has expanded quite a bit. You can see identity security here. You can see security services, cloud and app security. So CrowdStrike's going to be in 4 of those. And we did, a couple of years ago, we did a cybersecurity top stocks to buy. So, CrowdStrike has grown quite a bit when you look at the ecosystem. CrowdStrike has really been my favorite best of breed cybersecurity stock since the IPO in 2019. And I've covered it many times on the channel. Palo Alto Networks, we talked about it as being one of those companies that's great in several different areas. Not always the very best of breed in each class, but in several different of these buckets. And so you see them in endpoint security. You see them in data and AI security. You see them in vulnerability management and also in network here. And you can see Microsoft's in a couple of these as well. You can also see Zscaler and Cloudflare. Those are 2 fired up well favorites. So looking at cloud SaaS specific valuation metrics, you can see CrowdStrike is really expensive now. That's one that we were talking about, $150 or less. DCA, I think it's close to $350 now. Same with a lot of these other names. Now, Palo Alto is going to have an 11.6 EV/NTM revenue, which is significantly lower than CrowdStrike at 20.6x. And the gross margin 74%, so only 1% less than CrowdStrike. Now, Palo Alto is growing more into that recurring revenue. If you look back just a few years ago, it was more of a 75%, 25% blend. Palo Alto is more diversified, also has services, so it's not always a true comparison, especially, again, a couple years ago. And so the question is should Palo Alto be worth more or less than, say, an 11 or a 12x on that EV/NTM revenue? Some people could easily make the argument that, well, maybe it shouldn't be quite as low if CrowdStrike is a 2021. But CrowdStrike actually is growing and the metrics are quite healthy. It's also built in the cloud for the cloud. I'm not saying I would necessarily go out and buy a CrowdStrike at these levels, but what I'm saying is I don't think Palo Alto deserves a 20x premium. So looking at a chart, we do chart day every single Wednesday in Patreon Discord. That's at 9 o'clock a.m. Eastern. When you see orange, that's a previous chart day. Yellow is today's chart day. I'm just going to talk through it. And if you want to give our private community a try, we do have a 7-day free trial to Elite. That includes 3 live streams a week, as well as Discord with 50 plus channels breaking down all these different topics in a granular fashion. Discord also shares all of my buys and sells in real time, as well as the members from the community in the investing trade floor. So you can see the trend line in Palo Alto is somewhere around $258. And you can see we have a little bit of cross here. The 50-day moving average is a simple moving average is around 288. The 200-day is around 279. Now our buy target was $140.
Awesome.
It's now $317. The stock just keeps going higher as I talk.
I like to see when the stocks are high, okay? And I like to see when they're low. That's the big thing.
Interesting.
And sometimes they're really high. Sometimes they're very high, the stocks. And you go very high. That's when you
high.
want. Yeah. That's when you want to sell, when they're very high.
Woo.
You buy them when they're down very low.
And you can see the recent high here, $380 and change. So it got up to this R3 around 325. It broke down. It sold off, after earnings, it was around here like 295 where my cursor is. And now it's right back here at $317. Probably is going to go higher. I think if the market remains bullish, you could see the stock over $350. The question is if you want to pay that and what is the risk reward. So is Palo Alto Networks a buy at $317 a share? I think if you own it, it's a hold. Hopefully, if you did buy it, you bought it at much lower levels. If you didn't and you're getting into it now, I do think that this company will do well longer term, that it's going to ride the secular growth trend of cybersecurity. If you're buying and holding for the next 5 years, I think you'll be happy even if you bought it at $315 today. For me personally, I probably wouldn't buy it unless they were under 300, really probably 275, and ideally $250. I'm not saying it's going to happen. I'm saying that's where I would personally buy it in my $1.9 million taxable brokerage. In the end, you've always got to do what's best for your money. If investing insights like this are helpful to you and you want to be a better investor, subscribe to the channel, click that bell for notifications. And if this video was helpful, you want to return the favor, drop me a like and drop me a comment. Thanks for watching. Have a great rest of your day. Take care.